Hello friends, welcome back to your own channel WSG. Today we are going to understand, should we wait for investing or should we invest right now? So you have to be very clear that you have to invest today or you have to wait. Now this is one thing. Now when the market is almost all-time high and especially US markets are all-time high and gold is almost all-time high. So in that case, should you invest right now? In case if you want to invest right now, what should be your asset allocation? So this is a very important question which is running in everybody's mind. We are going to understand how should be your asset allocation and what kind of returns you can expect if you invest today, and if you do not, then what is going to happen. So very important video. If you're not subscribed to the channel, smash the subscribe button and of course the bell icon which is right beside it. Without wasting any further time in longer prelude, let's begin. So according to me, the time is today. You have to invest now. Invest today and you have to invest now. Now, question which comes in your mind that if you do not invest and if you keep waiting for some time, if you keep waiting for some market to fall, then what's going to happen? And there are some millennials who are of the opinion that why should they invest at all? For whom? For their kids? For their parents? Or for what? They want to enjoy their life, but for whom they should invest? Now if we understand the repercussions, if you do not invest, what's going to happen? First of all, I'll just make you explain what is the situation, what is the financial situation of the present millennial. Your salary is 50,000 per month. Now your expenses are approximately 80% of your salary. If you're married, I'm 100% sure your expenditure would be approximately 40k. At least that's the case with me. Now coming on to your savings, if you are saving 10,000 rupees per month, and if your boss is great, if your company is great, and they're giving you 10% hike every year, although I'm not very sure how much hike companies are giving nowadays. You can let me know in the comment section what's your hike, what's your salary hike which is being given to you. I'm taking 10% of the salary hike, which I think is kind of optimistic, over ambitious. So even if your boss is great and he gives you 10% hike every year, but this monster will always be behind you. What is that? Inflation. In India, the inflation is approximately 8%. And if you do not happen to save your money wisely, and if you keep procrastinating for better opportunities, what's going to happen? Let's understand. So if you are able to save 10,000 rupees per month and your investment period, since you are 30 years old and you're desirous of retiring by say 50 years. So approximately 20 years is the earning age which you have. So what's the big fun? What's the big amount which you are going to create when the monster of 8% inflation is behind you? Let's calculate. And once we calculate, we find out that you get to earn 24 lakh rupees after 20 years if you do not invest at all, because you have not been getting any kind of returns in expectation, because you've not invested. You are simply putting your money somewhere, not a very structured investment which you are doing. However, if you do the investment structured and you invest wisely in some asset allocation like equities, and your investment in equities, the average returns which you can expect is approximately 15%. Now keeping 15% in mind, if you invest, then let me tell you how much return which you are going to get. 10,000 rupees for 20 years, if not invested well, fetches you 24 lakhs. However, if you invest with return expectations of 15% in equities, that is direct equities or mutual funds, it's going to fetch you massive 1 crore 51 lakhs. So this is the reason why you should invest. So this is the corpus which is created in 20 years duration, considering 8% of inflation, and that is the reason why I am saying that investment in equities is very important. Now what are the other avenues available to you for investment? Because of course the equity comes with the element of risk. So what should be your asset allocation and what is the average returns which you can expect when you invest in other avenues? I'm going to discuss that as well. Now, if you take a reasonable asset in which you invest of approximately 12%, this will give you a lesser return but a bit of safer returns. Now the question which would be running in your mind, that where should we invest so that we get the safe and the sound returns? So we are going to cover this topic in the four heads, that which are the best asset classes to invest, what have been there in their past CAGR, and your returns which you'll be getting in your retirement, and what should be your asset allocation. And do not forget to find the pro tips which I will be keep telling you in between. Do not miss them. So what are the prominent investment assets as on date? And I'm talking about as on date. As on date, the more there are a number of assets in which you can invest, but the four prominent assets in which you can invest are fixed income instruments, equities, real estate, and precious metals. Now, what are these? Fixed income instrument, as the name suggests, is the fixed income asset allocation in which you get an average interest of approximately 6 to 10% depending upon the quality of asset you are investing. For example, if you invest in bank FDs, that is fixed deposits, you earn an interest of approximately 5 to 6%. However, if you invest in government bonds, you get approximately 8 to 10%. Corporate bonds can give you a bit higher, but of course, there is a risk of element in corporate bonds. The company may fail. So these are interests which are paid they are paid to you quarterly or monthly or annually. Generally, they are paid quarterly or semi-annually or annually, generally annually. So on maturity, you get the full capital back if you are invested in bank FDs and government bonds. However, in corporate bonds, the return of capital remains in question, because if the company doesn't perform, or if it fails, then of course your investment also fails. The second asset class is equities. Equities happen to be my favorite investment asset allocation. Why? Because it involves buying and selling of stocks listed at exchange. Very, very liquid. In case if you want to buy today and sell tomorrow, you can do that. Now coming on to the returns which it has been giving 15% plus CAGR. Let me tell you, if you are invested in good quality stocks, good quality equities, then it gives you as less as 20% CAGR. So you can understand the potential which equities have. Now what it requires? It requires constant monitoring, skills, and hard work, but there is no return, there is no guarantee of return of capital if you are invested in bad quality companies. So your choice of stocks, your choice of companies has to be good. You require skill, you require hard work, and you require patience. All three things will be grilled to you in your mind in this channel if you remain subscribed. So do not forget to subscribe to this channel, because all these three things will be imbibed in your body, in your mind, in your soul, and if you remain subscribed to us. In India, you have got additional advantage of no capital gain tax in case if you are invested in an equity asset for more than 365 days. So this is an added advantage in India. I'm not talking about the other countries. However, in India, you get the benefit of capital gain tax waiver if you're invested for more than 365 days. Now, the third asset class is real estate. Now, what does real estate involve? Real estate involves buying or selling of commercial and non-commercial properties, and the rental income and the capital appreciation are the two kinds of returns which you can gauge, which you can expect from the real estate. But it requires large capital. It's illiquid, because if you want to sell property tomorrow, you may not get it. Of course, you will not be able to sell your property tomorrow if you wish to sell it tomorrow. So you'll not be able to sell it. In case if you want to sell it in short term, you will not be able to get that return which you desired out of it. And of course, there is uncertainty in returns. However, there is a better option of investing in real estate nowadays in form of REIT, Real Estate Investment Trust. They are basically mutual funds in which if you invest, they do the job of buying and selling of commercial and non-commercial properties, and in return, what you get? You get dividends. So you can invest with the small capitals in REIT, and there has been a recent IPO of REIT Mindspace. So you can invest in REITs and fulfill your asset allocation dream of real estate by investing small capitals as well. And last but not the least is the commodity, which is skyrocketing nowadays. Over 10% of CAGR has been given in commodities in last 10 years. You can invest in three forms. Either you can buy bullions, that is you can buy biscuits as they call it, or you can invest in jewelry, or you can invest in ETFs. Now coming on to the ETF part. In India, you have the ETFs only of gold, not of silver. So you can invest in gold ETFs only in India. However, you do not consider gold or silver or maybe the commodity investment as to be a investment per se. This is a hedge. This is a safer investment which you keep to hedge your investment, to hedge your economic conditions. So it's not a clear-cut demarcation of investment. However, you can still invest in it and you can expect a return of approximately 10% CAGR. But I generally, coming on to my personal opinion, I do not consider investment in gold as to be an investment. It's a hedge, it's a safety measure which you have taken. It's an insurance of your own investment. In case if stock market falls, I can hedge my investment by investing in gold. So it's an important asset allocation asset. Now coming on to the safety option, the safety custody of precious metals is difficult. So this is something which you have to actually look for. So there are better ways of investing in commodity, especially in gold, that is in the form of either gold bonds or ETFs. If you invest in gold bond, there are two dual benefits. Firstly, you do not have to worry about the custody of gold, number one. Number two, you do not have to worry about the quantity of gold you are buying. Number three benefit is that you get to earn the interest as well. Not only your gold appreciates, but also you get the interest. So this is something which is very, very interesting, and that's why the sovereign gold bonds, SGB as they call it, the SGB demand is increasing day by day. So these are the four main assets in which you can allocate. What according to me is the investment horizon. If you invest your amount for 20 years, and if you invest 10,000 rupees per month, if you invest for 20 years, what is the amount you are investing? You are investing 24 lakhs, which is 2.4 million. And if you invest in fixed assets, that is which I told you, fixed return assets, you get 8%. You are able to make 5.92 million with these 8% returns. If you invest in equities, so you can understand you earn thrice that amount. Thrice you can get it. From 8% you get 15% returns, and you are able to make 15.15 million, which is 1 crore 51 lakhs. So this is the amount which you make in equities. However, in real estate, there is no fixed criteria of CAGR. That's why I've not been able to calculate. In precious metals, you earn approximately 10%, which makes it 7.65 million. So you are able to earn far better keeping your money in precious metals rather than fixed assets, that is FDs. So what is your opinion regarding FDs? Let me know in the comment section. What is your opinion regarding the fixed return assets? Let me know in the comment section, because I personally invest heavily in equities. So according to me, what should be your asset allocation? Investment is must. This is something which is bottom line, that you must invest, especially in equities. Especially if you are young, then you must have this formula in your mind, that if you are young, say if you are 20 years, then your equity investment should be 100 minus 20. That is 80% of your investment should be in equities if you are 20 years. If you are 30 years, then your equity investment should be 100 minus 30, which makes it 70%. So this is the formula which you have to keep at the back of your mind when you are investing in equities and you are allocating your assets. Now, diversification is the key. You should not invest 100% in equities or 100% in gold or 100% in FDs. If you are doing that, you are actually doing wrong to yourself. So diversification is the key. Risk and reward go hand in hand, because if there is no risk, there is no gain. So you have to take calculated limited risk, and of course in return you will be rewarded. So peace of mind is most important. If you are not comfortable in any particular asset, just cut that crap out. So invest in that asset only in which you are fully comfortable. But for your information, nothing can beat equity investment. It's the king of all assets. So what's your allocation in equities? Let me know, because my allocation in equities is more than 80% of my net worth. Although I am 35, I am over invested in equities. But let me know what's your investment in equities. That's all from my side, friends. I hope you like this video. You can share with your friends. I hope you will be learning few things more, and I'll be making many more videos of fundamental, technical analysis, and various others which are already posted in my channel Wealth Saga earlier, with although they are in Hindi, but now I'll be posting them in English for better assimilation and for better reach. Thank you so much for giving your precious time, friends. Bye bye for now.